Hey everybody, I hope you're having an awesome day. I wanted to put out a little video on a specific stock that I'm watching that's doing really well today. First of all, I want to talk about SPX. S&P 500 index, we talked about this on the show yesterday. I said there's a lot of gamma out there which can lend support to markets. What is that gamma? Basically, think of it as dealers, market makers, institutions that have taken on a ton of options. So since the election, people have been hammering out calls, puts, selling options of all kinds. The dealers have to take that on, and they hedge those by basically buying and selling stock or futures. That creates a bit of a clamp on volatility. And I said yesterday, we're coming down a little bit yesterday, but we're going to have a fair bit of support in that 60-25 to 60-30 level. Sure enough, we bounced right off of that. We had a little bit of help from that CPI number that was just kind of meh. And here we are having a nice day again. Now, specifically, there is one stock that is having an incredible day. This is one of the big tech names that sort of has been ignored a little bit. Think of Tesla back in the 170s, 180s. Finally, it caught on. Well, Google's sort of been sitting around. It's had some sort of antitrust issues surrounding it. But it came out a couple days ago and talked about this quantum capability, this quantum computing chip that is going to really potentially move the needle. Now, we don't know how soon that's going to make a difference to a company like that. Quantum has this sort of aura about it, which sort of promises all this incredible stuff. I think the reality is this could take a lot longer for that to sink in, but all you have to do is say some magic words these days or over the last couple of years, and whether it's AI now, it might be quantum. That might be the new catchphrase. You say quantum and you're going to do well. But without a doubt, this is one of the great companies. I have loved it. I have not been bearish on it. I have not been super bullish on it because it's been sitting around not doing a whole lot. But it's one of the great franchises out there. Let's face it, in the AI world, AI is nothing new. Google's been doing it for 20 years. They've been amassing a gajillion pieces of information about all of us through our Google searches and all the associated data that they've collected all these years. Google, the AI is absolutely nothing new to them. And so they have something that many companies, most companies don't have, maybe a Meta, Amazon, companies like that. They have an incredible amount of data. No one is ever going to catch up, at least for the next few decades, to that sort of incredible asset that they have, data. And they have YouTube, which is incredible. They have, of course, cloud services, an incredible company. So, and potentially, if there is a breakup at some point, that could be beneficial to shareholders, as the pieces might be worth more than the whole is worth right now. So I think there's a lot to be positive about, and this breakout starts to get me a little bit more excited about this stock. Let's take a look here, sort of sitting around that between 150 and 180 for a long time. Big breakout, a little bit of a delayed reaction there because the news was out kind of this day. And then it jumped yesterday. And then, of course, today it's just absolutely breaking out. So it's playing catch up. It's going parabolic, which is what a lot of stocks have been doing lately. And I guess Google wanted to be on board as well, wanted to join the party. So when I go out there and I look and I say, you know, if you've owned this stock, kind of an interesting setup right now. If you look at volatility, you can see in green here, this is where we're trading. The at-the-monies have jumped a fair bit, which is something we're seeing a little bit more lately. We're seeing volatility actually jump up into a big move up in a stock. Which is sort of not typically how you think of volatility. Typically, the VIX, for example, comes down when stocks go up. But into these sort of parabolic, panicky upside moves, you're seeing volatility rise. And so that's pretty interesting to see on something like Google versus yesterday, where it was on the red dotted line here. You've got the green really popping up here. And look at the skew. So this is to the right here, you can see upper skew level, right? The out of the money call skew. They're really steep. Look at the skew at the 52-week average, which is this dotted line right here. The skew tends to be a little bit downward sloping, right? The at the money implied vol, option pricing, is trading higher than where the out of the money is due. Usually you're giving up some pricing when you buy or sell, when you sell out of the money calls. Right now, they're pushing up that upside skew. Let's take another look at how to look at something like this. Look at the look at this skew here. So anything below this zero line is where calls are more expensive than puts. That's looking at the 25 delta call versus the 25 delta put, which is a certain ways out of the money in both respects. So when everything is above that zero line, puts tend to be more expensive, which is a normal structure for most stocks out there because people want to protect the downside. So they're paying up for puts. Right now, you've got upside calls exploding. And why is that? Well, there's FOMO out there. There's a fear of missing out. People are scrambling to buy upside calls in Google. Now, does that mean we're at the beginning of a run or the end of a run? Well, it's tough to say. This is as much an art as it is a science. If I see skew really jumping up ahead of a move, that tells me that something's brewing. Now that the move has already happened, it could signal a little bit of exhaustion, but I'm really liking the way that chart looks. So I don't really want to get in the way at this point. I'm going to want to wait and see how this plays out. If the stock can kind of jump up and then settle a little bit or settle in the next couple of days, that's where I'm going to look in there and go, you know what, this upside skew is very, very juicy at this point. And that's where I'm going to look in and I'm going to say, if I've owned this stock for a long time, this is a chance for me to generate a little bit of additional income via cover call selling. So I'm going to go out and I'm going to look at the DEES 27 expiry, for example, so right after Christmas, and I'm going to look at roughly around a 205 strike. So that's going to give me about $2.20. You could probably get about 220 if you sell those against your long stock. You need 100 shares of stock to sell one of these calls. 100 shares, you have to own 100 shares at a minimum, but you can go out and you can sell this one call for about 220, which is going to give you, you know, a little bit more than 1% for about 16 days of work. So you've got 16 days to wait to see how this turns out. And plus the strike is that's probably about 4.7, 4.5% above where we're trading right now. So you have the potential to continue to make money on your Google to 205, plus you get that extra 1 point something percent of added value from having sold that call. That's a pretty good call away return. You're probably looking at around $13 of upside in, well, maybe about, let's say about 8 plus 2, let's say about $10 in upside for this stock, which let's take a look. 10 divided by about where we're trading now. So you're going to get about 5% of upside if you include the premium and the potential for appreciation from 196 where it's trading right now all the way up to 205. So hopefully that gives you a little bit of an idea. Again, like we did on the Amazon not long ago, I said, you know what, I want to wait for Amazon to finish running up because when we sell cover calls, we're potentially giving away some of that upside. And I don't like to do that if I don't have to. I want to be given some value. Right now, Google is acting a little bit too parabolic for me to want to step in there and be aggressive selling calls at this point. I want to see how this plays out a little bit. But as soon as I get a day down, I'm going to definitely look at potentially generating that extra little bit of premium as we go into eggnog season and the market potentially gets a little bit sleepier. That S&P could have a little trouble getting through that 6090, 6100 level. And this could be a very nice opportunity to generate a little bit of extra cash to pay for some of those Christmas presents. So hopefully you guys enjoyed that and we'll see you next time.